Hi, this is Keith Schneider, CEO of MarketGauge.com. This is January 22nd, 2012, and our weekly edition of Market Outlook. So we're at some pretty critical levels. Let's take a look. For one, NASDAQ. We've got a 12-year chart. So this is ever since the collapse of NASDAQ in 2000, and you can see we have a really well-defined channel going back, starting with the bottom that was put in the early part of 2002, and continues on to now. So we've been trading in a really well-defined channel, and you can say that there's tremendous compression within the last couple of years, trading in a relatively tight range. But what's interesting is that we are sitting at the top of at least a decade-long trading channel. In addition, we are on a weekly basis, not quite overbought, but certainly trading in the upper part and very close to being there. So, as noted, also, notice how the volume has been declining as the market has been testing the upper end of this channel. Moving on to the daily chart, you can see just since the beginning of 2011 and throughout it, we had many tests of that rising channel, so there's some more definition. And every time we sort of got up there and got overbought, the market came crashing down. Now, obviously, the more tests, the final breakout, if it does break out, can be extremely powerful. But nonetheless, what's playing out here is you're in a bullish market phase at overbought readings on the daily chart. We hit over 97 on my daily RSI, started to come off a bit, but it looks like we're at the right at the top of the channel, not only on a long-term weekly basis, but also on the daily channel here too. So important trend line here off of the lows. Very important that we hold the breakout of what occurred, and also we now have another valid trend line from the lows that were put in December 2011. Important that we hold that. We had mentioned the breakout of this wedge. We didn't think the market was going to sell off, and now back up here, testing the highs at an overbought region. So certainly caution. Let's take a look at the spiders and see a slightly different story. Spiders, you can see we're in the mid part of a trading range, but on our monthly chart, a long-term trend indicator, we broke out of that wedge in a similar fashion. You can see that wedge formed here on the monthly chart, and we're trading above the 80-month moving average and not nearly at an overbought region on the RSI. On the weekly chart, you have a completely different picture than NASDAQ, where you've got a well-defined rising channel, but it's really only started since the lows in 2009. If we take the parallel, you can see what I did is I took a parallel channel here, and it worked pretty perfectly with the test down here. Now, interesting, we're above the 200-week simple moving average and above the 65-week important breakout of that wedge pattern that mirrored the NASDAQ, and we're doing okay, not really all that overbought. On a daily basis, similar breakout of the wedge, but we're not nearly attacking the highs, although we are also close to getting overbought on the relative strength index. So you got a situation where the market, as it's testing resistance here, potentially running out of steam as indicated by these RSI over here. So it's important that we watch the internal structure and the way the market's set up right at these levels, because it is susceptible to a potential turnaround. And we have important support at the 200-day. Now, one thing that's quite a bit different, even though you have this rising 50-day moving average, it's under the 200. So the structure of the market in the S&P, not nearly as strong. That broad market, the S&P 500, compared to the leading NASDAQ stocks, much weaker. All right. Another thing of caution is taking a look at sentiment. And we've certainly, worked off bearish sentiment, and it's now gotten to the point where the sentiment is so extreme, we have now closed under the lower end of the Bollinger Band on the VIX indicator. This is generally a very good short to intermediate term indication that the market is now overbought. So considering that we're at the top of a channel and potentially overbought on the daily, and the longer term or decade-long channel in NASDAQ definitely bears being concerned about the ability of this trend to continue, at least on a short-term basis, if not longer, and maybe this could be a potential top. Let's take a look at some of the other market internals. McClellan Oscillator, which is more of an intermediate, several week to a couple months, or a month or more at least. We're at overbought levels, but as you know, with indicators and any type of market, things could always get more overbought. Would like to see this intermediate term indicator break the trend line here, as well as fail at what we would consider the beginnings of being overbought. Now, on a shorter term basis, looking at the advanced declines on a 10-day basis and up-down volume, again, market seems to be at overbought regions, not really confirming additional advanced decline, advanced decline here. So on a short-term basis, also seems to be running out of steam, and volume not really coming in and sort of pausing at an overbought region. So what I'd like to see is the advanced decline work off and start moving down, and at the same time this turning down beneath this red demarcation that's overbought. So on a shorter term basis, we start turning down beneath these levels. That would generate a sell signal for at least the next week or so. But at this point, we're just sitting again at overbought readings across the board without generating a confirmed sell signal. Now, we do have a slight hook down, so it'll be interesting to see if this continues. So to sum it up, we have definitely moved to the upper regions of longer term channels, and in some case shorter term. Price momentum is at, in some cases, an extreme or getting close to it, and the internal breadth indicators are certainly at frothy levels. So certainly caution here. Now, the thing is that this is pretty well publicized. So what's interesting is this going to catch a lot of people short and have maybe a very shallow correction before this thing really resumes and accelerates to the upside? Or is this the end of an extended rally from the lows and the big wave down, as many cycle people are calling for? So the point is, let's focus now on what unfolds on a short-term basis and use some short-term trading techniques to be completely flexible and keep an eye out on a potential reversal up here. Anyway, that concludes this week's video. Hope it helps. Certainly at interesting levels not seen in a while. So, see you in the trading rooms or next week. Thanks, and bye for now.